All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it again this week here. So markets putting in a red week finally. So we had a very good, we've obviously had a very good summer rally. And we just came into July options X. And you're going to see we actually had a pretty good, an engulfing candle on the weekly time frame. The spiders and the Qs as well, although technically it was really just kind of like an outside move down on the Qs, but still, nonetheless, pretty good reversal week here. A lot of stuff going on, a lot to unpack here. So today, obviously, it's Friday. We had, I guess, an unconfirmed cyber attack with CrowdStrike. I'm sure everybody's aware of it. I don't need to go over it. So there was kind of some panic a little bit this morning. We also had earlier in the week China essentially announcing more crackdowns on chips, specifically affecting ASML, and they reported earnings on Wednesday. That stock got hammered, as you can see here. This week, also TSM down quite a bit. Down 3.5% today and down pretty substantially on the week as well. So semiconductors taking a hit. I've talked about this extensively. Chips, they're not really going to be the trade here moving forward. We talked about small caps. We had a very good rally in small caps. It was easily the trade of the year here for Carnivore Trades. Embers and I making a handsome profit on futures here on the Russell, but that did come in this week, as did everything. But again, chips kind of at the forefront here of the selling. We also had that cyber attack kind of, I guess, throwing a little bit of gasoline on the fire. There's a lot going on here, though. We are at an increased period of risk here, meaning that if certain levels, which I'll go over in a minute, do get compromised, we could see actual downside for the first time in a while. But right now, so far, we just kind of have a pullback, right? So at the moment, we haven't done any technical damage. If we look at the spiders, I like to look at them for volume. We have not, we have a little uptick in volume today. Towards the end of the day, it is OPEX. That happens every time. But this is still not distribution volume, even though we've had very good selling. If we look at, intraday, this is pretty forceful selling. Every little bounce is sold into pretty hard. So we had good selling, but not really good distribution volume. A couple of things that make me take it with a slight grain of salt. We'll talk about the risks in a second, but the cyber attack. So for one, I ran a poll on this not long ago. You can see, at least it's a small sample size, but I would assume it's not going to change all that much. I would say roughly, say 5% or so. People were unable to trade today, except to sell to close, so they couldn't buy to open. And so that creates obviously a surplus of sales. Now 5% of volume is not an insignificant amount at all. So it's definitely definitely adds to that. And also when you consider, if you can't, there was a little bit of, like, this morning, I was in the trading room this morning, there was a little bit of like slight air of panic there, right? At least like when I started my day here, I got that sense. So I would also imagine that those people who could not get into their brokerage or could not trade buy to open, they were probably sellers, so that added to the sell volume. So why am I bringing this up? Well, if we look at the S&P here, again, we know whole round numbers, OPEX, where did we close, right? 5,500, 5,505 on the dot. And you're going to see here, we had pretty much hate selling, Wednesday, Thursday, Friday. Where did it stop? Exactly at 5,500. And we actually put in a few higher lows here on an intraday basis the second we got to that level. So that was clearly the destination. So it makes me wonder if, this selling here was just kind of that unwind and mean reversion into that level where it's, burning out essentially the most amount of premium, as opposed to, was it actually a risk factor? Obviously chips do need to be delevered, chip stocks. And that has been the case, but it's just very convenient that we went to that level, and convenient that we had that extra sell pressure there. So additionally, no volume behind it, OPEX. There's the grain of salt. With that said, though, there is risk here. We're in a period now We had VIX expiration on Wednesday. That's where volatility can kind of become uncorked a little bit. We saw that this week. There's a big fake print here on the VIX. Let's just disregard that. But it was up pretty big the last 3 days, and that's put pressure on the market. Now, one thing that's kind of going on right now, we obviously had, President Trump get shot at last week. And today there's been lots of speculation this morning. Biden dropping out of the race. Members close to his family saying that he's going to drop out. Then the DNC is saying that they're backing him. So lots of uncertainty, right? We also had the cyber attack here. Market's a little skittish going into the weekend. A lot of hedges being bought here. Take a look at the intraday price action on the VIX last couple of days. Just, very, very, very strong. And this is happening while we're not seeing, we did see a pullback here, but we have not done technical damage yet. We're still above 5,500, and that did technically get defended by the end of the day. So the other side of this is, does the VIX, if nothing happens over the weekend, we could see a gap and go, right? We could see those hedges roll off very quickly. And, put sellers will come in and the market will, I could see it up 75, 80, 100 points very fast. If something bad does happen, I think now you also have a lot of hedges in place. So let's say we did gap down Monday, could we gap down in a V shape? That's certainly possible. We've got the 50 MA down there if we were to break that. On the Qs here, your 50 MA is not that far away. So these are levels I think that, could get hit. We did slice this trend line here. A lot of the time when you slice a trend line, you can get a fake break on the first hit. So just some things to consider here. That said, keeping all that in mind, this is a period of risk here. And right now, I'll just give you the levels. So 54.75, you want to see us stay above that on the cash S&P. That doesn't mean we can't have a close below it. It doesn't mean we can't wick below it. But you want to see the bulls be able to hold this level for the most part. If bears are able to break this and hold below it, it highly increases the odds of whatever the next bounce is, resulting in a lower high and then possibly lower lows. So we're definitely at a pivotal point here, but a lot of dynamics going on into Friday, a lot of noise too. With options X and just all these extra factors here with Trump and Biden and the cyber attack. So a lot going on here, but we'll simplify it and boil it down here. Watch that level next week. If we slip below it for a day and we go to the 50 MA and then we V shape back above it, then that's fine. But you definitely want to see that area holding here. So a lot of stuff going on this week. And really this next week or so will tell us where the market's going to go into August, I think. We have earnings, and the week after that we have the Fed. So I'd like to see how the market trades going into the FOMC. If we're down substantially, I think, we probably get some type of relief. If it's vice versa, it could be the other way around, but we'll see where we're at. Next week, I would just advise caution and definitely be a little bit more neutral. This is the first time I'm, getting any sort of cautious since really April, right? You guys know I've been in team bull the whole time here this whole summer, and now it's not a confirmed, not a guarantee, but there's definitely some caution that should be thrown to the wind here. So watch those levels again. Qs, we've got the 50 MA, like I said. You also have a 382 fib retrace that coincides with that level. So again, if we were to gap down on something Monday, I think there's some support in this area. If we were to really slice hard, you got the 50% all the way down at 458. So that would be your level there. I don't see us going past that anytime soon. IWM, again, pulling back off the highs. Again, great trade here. This can go all the way back to 210, 212 and still be in bullish configuration. So this has plenty of room for a higher low. And especially if the 20 moving average here just starts to catch up to price, this can still be in a very bullish configuration. So there's another positive too, is even though there was a lot of hedging going on at the weekend, IWM wasn't really down that much. So when you see small caps showing leadership, that's usually a good sign. Dow Jones backing off, still closing above 40,000 though. So we'll see if that psychological number gets defended early next week. SMH, again, the fulcrum of the market right now. If this bounces, I think the market bounces. We'll just keep it real simple. I think this is really the only chart you need to look at, honestly, going into next week. But again, looking at the fibs here, we did slice the 50 MA today. after a one-day bounce. It's a little unusual, but I would say 238 to 240 in that area, there's a ton of support. So watch those levels on the chips. And I think if the chips bounce, whole market gets a huge lift. Same thing with IGV. IGV backing off the last 3 days, but it's actually holding up fine. On the weekly time frame, we backed off here, but again, we had a nice up move, and pattern-wise, let me zoom out. There we go. Pattern-wise, it's still pretty good. We could just go sideways here, and then that can break out if conditions are still bullish. But I think it does need some time on the clock before it's ready to do that. Dow Transports, again, backing off the last 3 days as well, but just down 2 basis points today on Friday, so flat. And again, that indicates to me that there's probably not anything big coming over the weekend, right? Transport, if there is some big, volatility event, I think the transports will be down a lot, just like small caps, and they were flat. So really nothing terrible here for the transports, but they pulled back off the highs like everything else did. Interest rates here, starting off with the 2-year, again, got hit earlier in the week and late last week, and essentially held this 4.4 area. So right there, good bounce for the 2-year. Yield curves, a lot of talk about the yield curves right now. 210s are still holding up, still inverted by 27 basis points. 3-month 10-year is nowhere close. So I know everybody's talking about rate cuts and talking about uninversions and all this stuff, but the 3-month 10-year is not doing that yet. So it's really just the 210s and the other spreads. 5-year yield got a bid at 405 area, and then 10s and 30s. The long end is still pretty strong here on a technical basis relative. So you are seeing some uninversions going on, but it's not unwound yet completely, and it's really not close on especially on the 3-month. I also think personally, this doesn't mean anything. Take it with a grain of salt, but I think if the Fed does cut, I think the long end goes ballistic. That's just my take on it. And I think that that would be problematic. But right now, yield's holding up. And, they can take time. We could see, the data start to weaken. And, the inflation data might not really come back around until later. But I think the long end would be a problem at some point or another. Anyway, XHB here down 40 basis points today. Had a really good run. I think, DR Horton reported, and they had a really good quarter. Look at that. I think it's a new all-time high for that. So XHB, good bid. It came in pretty sharply off the highs yesterday, but it's still holding the gains, so no problems here. With the XHB VNQ, again, same kind of look, putting into this little kind of double top. But if this can digest that move, I think that can go up. So there's still some strength in some of these catch-up sectors. So if the market can stabilize after this little 3-day decline, there's areas that can still benefit. XLF backing off after the last 2 days. Take a look at Berkshire. New all-time highs there. Beautiful wedge. Nice breakout. KRE green on the day too. So again, another thing, I'd be a little worried about it. I'd be a little skeptical of a geopolitical event happening if the regional banks are green on Friday. At least not this weekend. But great breakout last week, and it's held the gains this week. KBE, I told you guys 52.50. It exceeded that target by quite a bit. Got all the way up to almost to 54. So KBE strong. Broker dealers backing off most of the week, but that's still at all-time highs. That's still strong. All right, into the commodities market here. So oil was down big today. This is what can you say? I mean, is there some weirdness going on today? Yeah, I mean, oil down 3%, 3 1/3. It's a pretty big move. I guess if geopolitical stuff was a thing, I would think this would be higher. I would also think gold would be up today, and it wasn't. We'll talk about that in a second. But you never know. But oil down, and it took a pretty good hit. The CME did increase margin requirements too. So that also could explain a lot of the hedging that's happened in the broad equity markets. Could also explain some of the action in gold and oil. I think that went into effect today. So that could be it. But either way, very volatile week here. Dipped early, closed below the green bar. tried to rally, failed, and then we closed weak on Friday. So oil, I'm neutral on, and we'll just say kind of in the short term, we're just like neutral to bearish here in the short term. Still got this big wedge here that we're watching too. XLE was very strong on the other hand. So even with the market sell-off the last couple of days, we were down today, but green Wednesday, Thursday, whereas the market was down. I think energy, I mean, you know, if I clean this up here, you look at the bigger picture here. This is just a monthly bull flag. It looks really strong. I think XLE is going to all-time highs. And I don't think it's going to take too long. There's the XOP. It's the same exact pattern, but way off the highs. And OIH, I think this is going way higher too, as you guys know, in the big picture. So that may take time, but I like these setups here. All right, uranium. So something happened this week. So CCJ did manage to slice this trend line here on the daily. The weekly is still okay. We're still well above that green, but the URNM failed. So finally, I have an update for you on uranium. Everybody asks me about uranium. I say, oh, it's never anything. Nothing's changed. But this week we finally closed below that breakout bar from January. So I'm just going to say that's, you know, not good for URNM. So I would expect lower prices here, which isn't a bad thing. I mean, you still have tons of room for a higher low, but that's essentially the dynamic. Now, the funny thing is CCJ didn't take out the low, and neither did the juniors. So it's weird because the juniors are actually showing strength by still being above that breakout bar low. So interesting dynamic there. Nat gas here, green the last 2 days, but it got sliced hard on Wednesday and on Monday, really. Back above 220 can rally to 240. And then if it really recovers, 250. I've avoided this for now. It is kind of tempting, though. It has been hammered here. So I don't think there's a ton of downside. But we'll see what it does. Dollar index, no updates. Just still, you know, it cracked the low 103.88 I told you about, and we're above that. So there it is. We cracked it and we closed above it. That's all that matters. You still got a weekly inside bar pattern, and you're inside of this big fat wedge. So dollar still holding up. All this stuff inside of here is noise. So we break out or down. My guess is out. Gold here. I told you guys that I didn't think it was ready to break out, and on Tuesday, Wednesday, we tried to, and it came in pretty sharply today. So on the weekly, I would say you got like a failed breakout here. However, I'll tell you this now. I think that the next dip in gold is something you want to buy. So that's just my 2 cents. I'm probably looking to buy this here. It just wasn't ready to break out yet. I like what GDX is doing. I love the trend line break here on the weekly. Let's take a monthly look. Oh, no problems here, right? Looks very good. And really on the weekly, it pulled back, but you had a 1-2 big power move, right? I would just call this a pause candle on the weekly. So no problems there. I think dip should be bought here. And silver, now possible lower high. So this might get to 28. If you guys remember, I was talking about I want it to go to 28 so I can buy. And it never got there, but it might get there now. But this weekly chart, this is good. I told you guys way back here, I was like, it's way too extended. It needs to consolidate. And it's done that now. The 20 MA has caught up to price. So silver, you know, silver can go soon if it wants to. SIL still holding up. It was down today, though. Platinum testing this trend line here. And it held. I still think this is getting ready too, but platinum and palladium, they go on their own time. They just go when they're ready and they go without warning. Again, you guys know my thoughts on palladium. I think it's cheap enough to own it if you have long-term capital here. Because when this catches up, I mean, you're talking about, you know, 3x easy. Copper rolling over. So we talked about, I said, watch this green bar low. We closed below it, and you can see we failed, you know, and went down. This is our first support here, right around 425. I'll show you that right here. So there you go. It's a 50% fib retrace. And you also have this kind of white line right there in that vicinity. It could get a bounce here. The pivot high before the breakout. I do think it's interesting in this level. I'm not sure if I'm ready to step in front of it personally yet, but I'll definitely keep it on watch. But those are the levels to watch. You got the 200 MA down here too, around 408. So there's definitely some levels it's coming into. It will get a very good bounce off of one of those. I think it's tradable. It's just a matter of finding it at the right time and when it is ready. Bitcoin really showing me up here. So I caught the low almost exactly, and this is on the holiday. I told everybody to buy, and it worked out really well. I ended up selling it before last weekend. I just wasn't sure about the situation. The buy signal I had, it should have kind of played out like by the middle of the week, and it just didn't. So for me, holding into the weekend was a little risky. And I still made a small gain on it, but it just wasn't worth it. And then of course Saturday, Sunday, the Trump thing happens and Bitcoin rips higher. And then of course Monday kept going, 1, 2, 3 pullback, and then another bid today. They're saying it's the cyber stuff. I think it would have just gone up anyway. How many times has Bitcoin gone up when there's risk off, and then it's gone up when there's risk on, and then it's done vice versa where it's gone down? I don't think Bitcoin knows or cares what it is at this point. We can come up with whatever narratives we want, but the point is it's up. And on the weekly time frame, unless we melt down, the next 2 days, we should be able to. Whoops. There we go. We should be able to close above. I'm trying to zoom in here. We should be able to close above this red bar high. If we do that, that negates the sell, and Bitcoin is just strong here. I still think, however, by the way, the ETH ETF I think goes live Monday or Tuesday, and ETH was up nicely today too. Very good pattern here on ETH also, but I still think this monthly 20 MA is too far away from price, and I would just like to see a little bit more, right? A little bit more consolidation. But ETH actually looks pretty strong here too. I like that monthly there. Weekly pretty good too. Daily's good also. So crypto holding up. All right. Again, anyway, so definitely heightened risk here for the next week or so. If the bulls can hold up here and just firm up, they don't need to rip to new highs, but we just need to firm up. I think the market will be okay going into August. Where risk comes into play is if we start losing these levels here, and we can't reclaim them. So that would be this area here, this prior consolidation before the breakout. That's a battleground, and if it holds, it holds, and market's okay. If not, we definitely could see some more risk and more volatility coming to the market, and maybe some more deleveraging, specifically in tech. So just be aware of that. Anyways, guys, I'm gonna wrap it up here. You guys take care. Don't forget to come find Jason on Patreon, like, comment, subscribe to the video. Come find me on carnivoretrades.com, and I'll see you guys all next week.